Hello, this is Sahura. We'll be with you with the midweek market update. Today is December 3, Wednesday, and we're going to see what's going on in the market before tomorrow, as the day after tomorrow's US very important inflation numbers, PC price index and core PC price index, the data which will be the most important inflation number before next week's Fed meeting. However, let's check the markets. The markets so far this week, we had the most important data, we had some inflation numbers from different economies. At the same time, besides the geopolitical tensions, besides the trade tensions that we had, besides all of them on the economic calendar, we had manufacturing PMI numbers on Monday, and today, Wednesday, we had service PMIs, which these data, the purchasing managers index numbers, always tells us it tells what's going on in the economy in the different sector, in the manufacturing sector and in the service sector. Again, I apologize for my voice. I'm still sick. Let's see when this influence is going to finish and ends. It's like more than 2 weeks. I'm just trying to feel better, but still, that's what's going on. I'm sorry for that. Week started with the weaker than expected Chinese economic growth numbers. Manufacturing PMIs from 49 slightly increased to 49.2, but still under 50 expansions area. The service PMIs, non-manufacturing PMIs, from 50.1 slightly eased to 49.5. And the same day, we had OPEC meeting as well on Sunday. The OPEC meeting had nothing to surprise us. We already knew that the OPEC, before the meeting, they mentioned that they will not increase the export or output, we can say better, in the first quarter of 2026, as the market is going to get oversupplied. So to control the market, the OPEC has already decided that, and we knew that they want to decide that. Anyway, the week started on Monday next day with the PMI numbers. In Australia, manufacturing PMI slightly increased to 51.6 from previous 49.7. In Korea, we had export and import data. We saw that the export increased by 8.4% in November, getting closer to the New Year Eve. The countries like South Korea, the China, and the India, which they have more export than import to other countries. We can see probably a little bit better number as the New Year Eve and New Year holidays increasing usually the retail sales. Again, later in Japan, we had manufacturing PMIs from 48.2 to 48.7, slightly increased, less than expectations, but still it was positive. Saxon manufacturing in China, the private sector manufacturing activity from 50.6, slightly eased to 49.9. Then in Turkey, we had GDP weaker than expected for the third quarter, and manufacturing PMI again, which from 46.15 increased to 48, but still, again, under 50 expansions area. Later, from European economies, we had manufacturing PMI in Spain from 52.1, slightly eased to 51.5. In Italy, manufacturing PMI from 49.9, slightly increased to 50.6. In Germany, from 49.6, slightly eased to 48.2. That's why the whole Eurozone manufacturing PMI from 50 slightly fell or decreased to 49.6. In United Kingdom, we saw the manufacturing PMI. Later, we had manufacturing PMI for the service. Here we go. The manufacturing PMI at 52.2, it was unchanged. I mean, it didn't change in United Kingdom. I'm trying to find the number. I know that it didn't change, but yeah, here. It was stable at 50.2. In India, manufacturing PMI slightly eased, but still, I mean, the numbers doesn't show that they have a trouble, but still they're weaker than previous month. In South Africa, same. Then we had manufacturing PMI numbers in United States. In Canada, also manufacturing PMI from 49.6 slightly eased to 48.4. In the United States, ISM data shows that US manufacturing PMI from 52.5 slightly eased to 52.2. The ISM number showed manufacturing PMI at 48.2, which is slightly lower than previous 48.7. Then we didn't have a number important data. Next on Tuesday, we had inflation number in South Korea. Inflation again slightly increased. Then in Australia, we had again building approvals, which fell by more than 6%. Previous month, it's increased by almost slightly more than 11%. And then during the week so far, we had too many speeches from the central banks, different economies, especially from the Federal Reserve, and most of the members, FOMC members, they talked about the need of a rate cut as the manufacturing PMIs and other data generally shows that the US economy is under pressure. Now the market is counting more than 89% on 25 basis points, almost 88.8%, almost 89%. There is a chance for 25 basis point rates cut in the next meeting. However, the thing is that since there are really two different parts in the Federal Reserve right now, and both of these groups, they have between the idea and the comments is so different. The part of the Fed members, FOMC members, they are really strongly thinking about the holding the current rate. On the other hand, we have the members that are strongly supporting the rate cut. That's why the differences is so high here. Even thought the chance of the cutting the rates is more than 88% right now, almost 89%. But still, there is a risk of probably that they may be at after the conversations that they will have before the meeting. Maybe some members they change their ideas. That's why the risk and uncertainty is still high about what the Fed is going to decide. Even Todd has mentioned the most members now they're thinking about the rate cuts. Yeah, that's the risk of the markets and the speeches that so far we had this week from the different members. In Japan, we had 10 years bond yields slightly increasing from 1.65% to 1.87%. 5 years and 10 years, both of them, the yields for these bonds increased. Why the yields increase? Because the market is really now in the Japan they're counting on increasing the rates by the central bank even thought in 2025, even in 2025. The last week we had a meeting between the Mr. Ueda and Mr. Takaichi, the Prime Minister and the central bank's governor. Central bank's governor, Mr. Takaichi, Mr. Ueda was trying to convince Mr. Takaichi that yes, the economy needs more support, but at the same time, because of the weaker yen, the economy at the same time is under pressure because of the weaker yen as the exports is getting so higher, and that can increase the risk of inflation as well. That's why the central banks, we didn't have any news that what final they decided, but at least we know that the market with the higher yields for both 10 and 5 years, both, and now the market counting slightly on the rate hike in Japan. From the United Kingdom, we had a house price index which increased by 0.2% monthly and 1.8% annually, and that shows that inflation is higher than expected, but still, again, lower than the previous month. That shows that generally the inflation is under control, and most probably we can see 25 basis point rates cut from the Fed, from BOE in its next meeting. Then we had Spanish unemployment, which slightly eased, not slightly, even sharply. We had lower unemployed by more than 18,800, while the unemployment rate in Italy slightly eased to 6% from previous 6.2%. On the other hand, in a bigger picture, in the whole Eurozone, unemployment rate remained unchanged at 6.4%, while the market actually was expecting about the 6.3%. In Eurozone, we had inflation numbers as well. The inflation which showed that on the annual scale, the core inflation unchanged at 2.4%, while the headline inflation slightly increased to 2.2% from previous 2.1%. However, on the monthly scale, we can see that the inflation in Eurozone fell 0.5% for the core inflation and 0.3% for the headline inflation, which means we have really weaker demand across the Europe. And that's the main reason of lower inflation, not because of the very good central bank reactions or decision on this, but mostly because of weaker demand. Same thing we had in other countries, including Turkey as well. In Italy, PPI, the producer price index, increased by 0.2%, and on the monthly scale fell by 0.2%. Annually, PPI increased by 0.1%. Then we had the Red Book retail sales in the United States, which increased by 7.6%. The main reason is because of the government shutdown. And during the government shutdown, the 6.1 or 6.2%, and sometimes 6.4% weekly result for the Red Book. During those government shutdown days, that fell to very low levels, to 5.9%. But as the government shutdown ended and the people they get back to their work, the retail sales also get better as they got paid their delayed salary as well. So that was the main reason of the retail sales is a better retail sales in the previous week. Yesterday, we didn't have much important data to talk about, but earlier today we had FX reserve report from the South Korea, which increased. Then we had the API weekly report showing that the oil inventories in the private sector mostly fell by almost 2,500,000 barrels. The inventories for the mostly for the private sector, as the API reports usually forget. And then we had manufacturing PMI from Australia, the service sector, the service sector from 52.5 slightly increased to 52.8. In Korea, we had GDP numbers. GDP in the third quarter increased by 1.3% quarterly base, and in the third quarter at the annual scale increased by 1.8%. Again, that was the most important data. But later, we had the service PMI numbers after manufacturing PMI's data that we had on Monday. The service PMI today was very, very important. In Japan, the service PMI from 53.1 increased to 53.2. In China, Saxon service PMI from 52.6 eased or slower to 52.1. In India, where the service PMI from 58.9 slightly increased to 59.8, but with the weaker activities in manufacturing sector, the whole sector, the manufacturing and the bigger picture, the manufacturing and service sector together, the composite PMI eased to 59.7 from previous 60.4. In Russia, service sector increased by 52.2. It was better in the manufacturing sector as well. And then we had Turkish inflation number, which we saw the inflation on the both monthly and annually increased, slightly decreased, slightly eased. But again, same as the Eurozone, the lower inflation in Turkey is mostly because of weaker demand, nothing else. That we cannot say nothing, but still, the main reason is weaker demand, which is not so good. And then we had PMI numbers from Italy, which we saw the service PMI from 54 slightly eased to 55. That's why the composite PMI numbers in China, composite PMI numbers in Italy also from 53.1 increased to 53.8. And then in France, Service PMI from 48 slightly increased to 51.4. That's why the composite number from 47.7 increased to 50.4. In Germany, service sector slightly eased from 54.6 to 53.1, while the composite PMI from 53.9 slightly eased to 52.4. Generally, looking at the whole Eurozone number, where we can see that the Eurozone service PMI from 53 slightly increased to 53.6. We can see other data that generally the manufacturing PMI, looking at the Eurozone data, we can see that manufacturing activities eased. I mean, compared with the previous month. Whole composite manufacturing PMI in the Eurozone from 52.5 slightly eased to 52.8. In United Kingdom, the service sector from 52.3 eased to 51.3, and composite PMI from 52.2 slightly eased to 51.2. Producer price index, or PPI numbers, also we had from Eurozone, and we saw that the producer inflation increased by only 0.1% in October, while the annually it fell by 0.5%. Mortgage rates, which shows that it's like the activity slide mostly in the housing market, from 6.40 eased to 6.32. But at the same time, we can see that the applications also is, because the people mostly, they do not believe in the next incomes. So yeah, they're more cautious. At the same time, we are getting closer to the New Year Eve, and usually getting closer to the New Year Eve, it's slightly making less housing market activities. I mean, just like people, they get interested to change their home or to buy a new home before New Year. Then we had in the United States, we had the import and export price, export index and import index, both of them, they were flat previous month, while the labor productivity in Canada increased by 0.9%. Capacity utilization increased by 55.9, same as the previous month, but it's very low for the utilization, the capacity utilization, which means that the market companies and producers, they are not producing with their 100%, with their all what they can. That's why we can say that this lower utilization, we can say that the economy in the next months can be under pressure. Industrial production increased by only 0.1%, while the manufacturing production was flat. That's what generally happened in the market, in economic calendar so far this week. Let's see now the charts and see that with these data that we had, what we can see in the charts and what the charts can tell us. Starting with the risk of the market, with the VIX, with the lower geopolitical tensions, and with the less, with the more, we can say somehow, the positive news that we had from the peace talk between the Russian and Ukrainian, the market risk eased in the recent days. Even now, just like in the last few minutes, it's slightly increased to above 18 again, but generally the market risk is lower compared with the previous week. That's weaker, less risk in the market. Actually, we can say that this way is better. Less risk in the market put the pressure on the in the US dollar, and the dollar index fell under 99, now trading at 99.90. Put the slightly pressure on the US dollar index, and putting the pressure on the US dollar index sometimes slightly increase the gold price as well. But generally, the gold price is mostly side movement with slightly under pressure. And if the Federal Reserve cut the rates, or they do not cut the rates, in both of them, it support the dollar index. If the Fed cut the rates, weaker US dollar will support the gold price. If they do not cut the rates, money which is getting out from the stock markets will increase safe haven demand, and again will support the gold price. Generally, the gold in a good position right now. Same thing we can say for the silver. The silver also is moving at the same Silver also doing the same reaction, having the same reaction. In the other market, we can check the stock markets. Looking at the stock market, we can say that with the just like market risk increases a few seconds ago, we have to see just like what happened during we were talking, the market risk increase. But generally, the getting closer with this uncertainty about what the Fed is going to decide. I mentioned that even thought there is a chance of 88%, 89% of the raise cut, but still there are too many of members. They are really strongly supporting the holding the current rate as the inflation is high. That's why the stock markets are not sure about what's going on, and we can expect more pressure on the stock market. Same thing for S&P 500, Dow Jones, and the Nasdaq. All of them, they're going to have the same reaction. We can expect some pressure on them. In the cryptocurrency market, the Bitcoin, after touching 84,000, slightly increased to 93. Current price is 92,500. But again, 92,000 and 94,000, they are the first resistance levels. And if price gets above them, we can say the downward or downside, or we can say I mean, lowering the prices is somehow can be avoided. But at the same time, if you want to say that the trend is getting bullish, and we can say the gold that the Bitcoin can get again about $100,000, $120,000. First of all, we need to see the 97,000. I mean, the 97,000 is the key pivot still. Even top 92 and 94,000, they are the key resistance. Yep, that's what's happening in the market so far this week. Before the US data. Hope it was useful for you. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as possible. Have a good time. Bye-bye.